So the first thing, like I stated, the institutional buyers that are coming in, they're not, in my opinion, coming in because of the attractive interest rate or how low of a risk it is. So hi everyone, hope you're all having a great day today. In today's video, I'm going to cover BlackBerry stock because they did release an additional press release covering more details on the senior notes. I think it's a good deal personally. It's not as good as the previous agreement with Fairfax because that was a lower interest rate with a higher share price in terms of conversion. But I'm going to go over all that stuff. I'm going to also show the institutional holders in terms of percentage points, just to show if those senior notes do get converted, how much of a representation of a hold will they be, and as well as the short interest in terms of how much the stock is shorted. Just a tidbit, I guess. It's not considered extremely shorted, but I think it's decently shorted. So I'm going to show those numbers as well. And I'm going to elaborate more and more on a bunch of stuff as I'm going. Hopefully you guys like the video. Hopefully you enjoy it. And like always, I'm not a professional, so please do your own due diligence and research before buying and selling. This is all just my opinion. And at the same time, I do own shares in BlackBerry stock. So bear that in mind while you're watching this video as well. So if you want to go to the press release, just go to BlackBerry Investors Relations website. They don't always have it right off the bat sometimes because the news gets it like about 30 minutes or an hour earlier, but usually they try to keep it up to date as much as possible. Then click on this. It's a PDF file. I already have it open though. BlackBerry announces pricing of upsized private offering of $175 million of 3% convertible senior notes. Again, in case you're not aware what senior notes are, and especially convertible ones, is essentially an investor is willing to lend out money to a company that will provide them senior notes that are convertible, and in return they will get interest rate and option to convert that senior note to shares in the future based on agreed amount, price conversion, share price when the deal was made. Now at the same time, it provides low risk too for the investor in a way, give or take, in case if the company does go bankrupt. These senior notes are paid back before basic debt and all that stuff. Like it has priority in terms of being paid back in terms of debt versus other debt. So with that comes a trade-off, and that trade-off is a lower interest rate. You don't have a great interest rate on your return. You have a lower one, but it's not a big deal because usually what these investors are, well, it's like a net to fall back on, but these investors are usually trying to do this to because they believe in the company, or hopefully believe in the company, to get a better return in the future, to convert that senior note into shares because they're assuming the company is going to be at a higher share price, right? The share price is going to rise up higher. So yeah, so there's that, which is good because I think there's two institutional buyers that came into this, and I'll explain why later on. And I'm assuming they bought in because they believe in the company. So if they believe in the company, it's more of a reason I think that the company might be doing well. And I'm going to share other additional information as to why I think the company is going to do well as well after we read this press release. So announced today the pricing of private offering of $175 million aggregated principal amount of its 3% convertible senior notes due 2029. The notes at approximately 32.5 conversion premium to closing share price of $2.93 of the New York Stock Exchange on January 24th, 2024. Again, we saw the share price pretty much tank. So essentially, given this price and all that stuff, they're basically getting the share price almost like in today's value, give or take, right? So I don't think it's a big deal, just because in my opinion, if an institutional buyer wanted to buy this many shares, it would drive up the share price quite a bit. And again, like I stated in yesterday's video or 2 days ago, yesterday's video, is if they did that, you would assume that it's great that it's going up, but if they need to get out for whatever reason, they're going to get rid of that many shares, they'll drive the share price down because of how low of a volume this stock is currently trading at the moment, right? So with that low volume, they can move the stock up and down almost themselves with this many shares. So this is a great way to get in without having that kind of effect, in my opinion. Again, I'm not a professional, but this is just my opinion. And then the notes were offered only to persons reasonably believed to be qualified institutional buyers in accordance with Rule 144A under the Securities Act of 1933, as amended the Securities Act, and pursuant to prospectus exemptions in Canada and other jurisdictions. BlackBerry also granted the initial purchasers of the notes the option to purchase within a 13-day period beginning on and including the date of which the notes are first issued, up to an additional $25 million aggregate principal amount of the notes. The offering was upsized from the previously announced offering $160 million aggregate principal amounts of notes. The closing of the offering is expected to occur on January 29, 2024. subject to customary closing conditions, including approval from the Toronto Stock Exchange. The reason why I state that there's 2 institutional buyers, I believe, it could be more, like in terms of split, but I believe it's 2, because of the statement coming up right now. So BlackBerry estimates that the net proceeds from the offerings will be approximately 169.6 million, or approximately 194 million, if the initial purchasers exercise their options to purchase additional notes in full. So I'm assuming that because it's up to 25 million additional, I think they're assuming that right now they have word that one of them is going to buy it. So minus fees and all that stuff, they're at basically 175 million, but 169.1 million. But they're thinking that if the other institutional buyer buys it, that would be an additional 25 million minus fees, comes up to 194. So I'm assuming it's 2 institutional buyers buying this. And when I did a conversion, if it does the 194, it's roughly about 50 million shares, if my math is correct, and 50 million shares. So just to show that institutional investors itself. So currently, shares held by institutions is roughly sitting at 53.78 million, or sorry, 53.78%. But in terms of Fairfax Holdings, they have the most right now, getting close to 8% of the amount of shares available, and they hold 46.72 million shares. And in terms of shares that are out there completely for BlackBerry stock, it's about 585.35 million shares. So to put that in perspective, quick thing to mention at the same time is what happens if this gets converted. So we got 50 million shares coming in terms of essentially it would be diluting the stock. That's the one problem. But then you could trade it off saying, well, they're providing us funding to continue the company in terms of hopefully being profitable and driving up the revenue over time, where this would not even matter, right? So let's just say the stock is trading at like $20 a share, just whatever it might be. These 50 million shares come in, dilute the stock a little bit. Stock drops in terms of pricing, but hopefully we're at a good position where it does not matter. That $20 a share is just arbitrary. Like, I'm just throwing a random number, so just FYI. But yeah, so there's that. Now, million share exercise. Okay, so yeah. So, or approximately 194 million if the initial purchaser exercised their options to purchase additional notes in full. After deducting fees and estimates, offering expenses payable by BlackBerry intends to use the net proceeds from the offerings of the notes to fund repayment or repurchase of its outstanding 150 million aggregate principal amount of 1.75% extendable convertible unsecured debentures due February 15, 2024, the existing debentures and remainder for general corporate purposes. So the debt is 150 million, whatever excess, they'll use it for general corporate purposes. And if you want to compare it to the last deal, so the last deal was better. It was at 1.75%. This one's at 3%. But at the same time, in terms of the federal interest rate, it's somewhere between 5 to 5.5%. I was pretty impressed, to be honest, them getting 3%. The reason why I'm still happy with this percentage point, extremely happy with the 1.75%. Like I said in the previous videos when I covered this is essentially free money, in my opinion. Literally free money. 1.75% is, I was shocked that that was given. At 3%, it's still considered, in my opinion, free money. What I mean by free money is when you could get a loan that's relatively low, like for example, let's just say 3%, and then the return on investments elsewhere is at least 5%. Like for example, CDs, it's essentially just like interest rate kind of stuff. They're pretty much at 5% right now. So you could get a way better investment elsewhere than 3%. So if you were truly just chasing interest rate, this is the reason why I believe that the two institutions, if it's 2, because they make it seem like it's plural purchasers, right? So it's more than one. Or I don't know if they're just trying to like make it general statement. But the reason why I believe that these institution buyers are buying this because they believe in the company in the future from what they're seeing is because this interest rate is so low. Yeah, it's safe, but there's still safe interest rates out there that you could get 5% right now for this amount of time frame. So I don't think that they're coming into this investment. Like usually, by the way, convertible senior notes, the investors are not coming in for the interest rate. They're usually coming in to convert for the common like the share itself. So they'll get a certain amount of shares, and they break that down even further. So let me see, 150 general corporate. Okay, so the notes will be BlackBerry's general unsecured obligations, ranking senior to BlackBerry obligations under the existing debentures. The notes will bear interest at a rate of 3% per year, payable semi-annually in areas of February 15 and August 15 of each year. beginning on August 15, 2024, and the notes will mature on February 15, 2029, unless earlier converted, redeemed, or repurchased. The initial conversion rate of the notes is 257.5826 common shares per $1,000 principal amount of the notes, which is equivalent to an initial conversion price of approximately $3.88 per common share, representing a premium of approximately 32.5% over the closing share price of $2.93 of the New York Stock Exchange on January 24th, 2024. So yeah, this portion is obviously worse than the previous one held by Fairfax / Prem Watson's holding company and all that stuff, where they were given 1.75% on the loan interest rate, and then at the same time the convertible share price was $6. This one is higher interest rate, so 3%, and a lower share price conversion in terms of share price. It's $3.88. Now, it is unfortunate because it's such a low one, but it's not a big deal because, again, I see these institutional buyers just coming in for the sake of just coming in at basically almost current share price, right? For the reason I stated earlier, because if they try to come in right now with how many shares they hypothetically would be trying to come in with, they would drive up the share price quite a bit. And then it's like, it's not guaranteed. It's still a risky investment where they're like, if we need to get out, we'd be driving the share price down as we're getting out. So it's like, what do? You just basically panic sell and all that stuff. But it depends. Then also trigger a bunch of events too at the same time, maybe with that kind of purchasing power, which I could probably just highlight this to jump around for a sec. So in terms of this stock being shorted quite a bit, right? Now, to be considered extremely shorted, the stock has to be shorted about 20% or higher of how many shares that are out there, right? Currently, right now, we're standing, if you look at BlackBerry stock, the US side, right? So BB, ticker symbol, it is shorted about 7%. And then if you look at the Toronto side, BB.TO for Toronto Stock Exchange, it's shorted about 1.61%. So if you add that, it's almost 9%. Now, these are self-reported shorted positions. How much more is it shorted without self-reported? It's anybody's guess at that point. Maybe a couple points here and there. It could be quite more significant. It's hard to tell. But let's just say even if it was at 10%, I would say it's decently shorted, but not extremely shorted. The reason why it's important to know when it's extremely shorted, just in case, doesn't mean that this scenario would happen, but is if it was extremely shorted, then what would happen is whatever drives up the share price, the banks that hold these short positions for the whoever might be investing, institutional investor and all that stuff, would sometimes tell the institutional buyers, you need to buy up the share price at this price point because it's becoming even more riskier and you might not be able to pay it off with the funds you have available and so on and so forth. So then in essence, the shorts are driving up the share price because they're forced to buy at the higher price that's happening. So there's that. But again, I'm just stating that just in terms of information basis. I'm not necessarily saying that would happen. Again, it is not considered extremely shorted because to be considered extremely shorted it has to be 20% or higher. But I think it's just decently shorted, just FYI. Now, prior to the close of business on the business day immediately preceding November 15, 2028, the notes will be convertible only upon satisfaction of certain conditions and during certain periods, and thereafter at any time until the close of business on the second scheduled trading day immediately preceding February 15, 2029. BlackBerry may satisfy the conversion of the notes by paying or delivering, as the case may be, cash, its common shares, or a combination of cash and its common shares at BlackBerry's selection, or in the case of any notes called for redemption that are converted during the related redemption period, solely its common shares. So BlackBerry may not redeem the notes prior to February 22, 2027. So they can't redeem the senior notes before that. It has to be after, except in the event of certain tax law changes on or after February 22, 2027. BlackBerry may redeem for cash all or a portion of the notes at BlackBerry's election if the last reported sale price of BlackBerry common share has been at least 130% of the conversion price then in effect on each of at least 20 trading days, whether or not consecutive, during any 30 consecutive trading day period, including the last trading day of each period, ending on and including the trading day immediately preceding the date on which BlackBerry provides notice of redemption at a cash redemption price equal to 100% of the aggregate principal amount of the notes to be redeemed, plus accrued and unpaid interest to, but excluding the redemption date. if BlackBerry undergoes a fundamental change as defined in the intrusive governing the notes, subject to certain conditions, BlackBerry will be required to make an offer to repurchase for cash all the outstanding notes or any portion therefore that a holder determines to sell BlackBerry to at a repurchase price equal to 100% principal amount of the notes to be repurchased plus accrued and unpaid interest, if any, to be, but excluding the fundamental change repurchase date. In connection with certain corporate events, or if BlackBerry calls the notes for redemption, BlackBerry will, under certain circumstances, increase the conversion rate for note holders who will elect to convert their notes in the connection with such corporate event or convert their notes called for redemption. But that's basically the press release. So the thing is, though, this points to me a couple things. So the first thing, like I stated, the institutional buyers that are coming in, they're not, in my opinion, coming in because of the attractive interest rate or how low of a risk it is. Just because, in my opinion, given how low this interest rate is, yes, it's not as low as the Fairfax deal with Prem Watson and all stuff, but still quite low given the federal being at 5 to 5.5%. And there is still safe investments out there that can get you to 5 to 5.5%. I think they're coming in because they believe in the company. And some of the reasons why I would say they believe in the company, in my opinion, is because we see that they are getting a good amount of traction in terms of, let's just say design wins too. Because, for example, I think it was October 17th or something like that, they were saying that they have a bunch of proof of concepts with companies for the Ivy system. So that's good. Hopefully they translate just like Foxconn, where they started off with QNX, and then they wanted to do, they switched over to Ivy as well at the same time. And Foxconn is such a great company for the EV sector because they're hoping to do about 5% of EVs in 2025 and hopefully grow just like they've grown in the cell phone market, where they produce about 40 to 45%, I believe, give or take, of the cell phones out there. They want to do the same thing with the EV market, where they're producing 40 to 45% of the EVs out there. They're not building their own EVs. They're building other automakers' EVs for them, just like they do for cell phones. For example, Foxconn produces iPhones. They're not the developers of iPhones, but they produce it for Apple themselves. So that'd be great. And if they can incorporate, just like they are in terms of their overall path, in terms of including Ivy for EVs, that'd be a great market to break into. Plus, we have the sound system that the BlackBerry has, that a large OEM is getting into, I believe, or I don't know if they were specifically saying for Ivy, but I think it was for the sound system, and they were excited for that too. So we have a lot of things coming into the works, and it's unfortunately going to take time. That's a downfall. We need to see revenue growth, but I see a good amount of promise coming in. It's just the amount of time, and these institutional investors, I think they see that because, again, like I stated, the amount of percentage institutional investors we have, it's quite a bit actually. It's 53.78, and then in terms of you count float, all that stuff, it's almost 55%. And plus we have about 50 million shares coming in with this, or up to 50 million shares it looks like, with this convertible senior notes agreement with potentially 2 institutional buyers. So there's that. Hopefully you guys enjoyed the video. Hopefully you guys liked it. Again, this is just my own opinion. I'm not a professional or anything, so please do your own due diligence and research before buying and selling. And keep in mind, again, I do own shares in BlackBerry stock, so bear that in mind when you watch this. Hopefully you enjoyed the video. Hopefully you liked it. If you do, consider dropping a like. It helps the channel, so thank you so much for that. And at the same time, I'm going to be dropping the Q4 video hopefully in about, I know I said last time 7 days, but 7 days. So I guess 6 days, 7 days-ish now. Be on the lookout for that. And thanks again for watching. See you guys in the next video. Peace.